Welcome to TradeTheNBA.com. This is John. This report is for the 6th of April, and well, we saw a nice little upspurt there with the beginnings of, pre-Fed notes, whatever you want to call it. But the reality is we got a major roadblock as we got up into the peak areas, and I was talking about it on the 5K chart. We'll take a look at that in a minute. But it started to become a reality that the optimism of a deal by Friday for healthcare reform and that would come, and we learned that, well, once again, no. So that certainly created what I would just call one of those gasps of throwing the hands up and saying, all right, we're not going to get the breakout that we were looking for yet. So we retraced quite a bit, and all it was just to move back into there, and we've hit this soft shakeout area. We're just starting to move back to the positive zone, but we still never got a cyan move below red from a daily, and so it's been a nice retrace in the sense of easing off any overbought, but still, price is still at its peaks, and yet every minute you hear gloom and doom and the world is over, blah, 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 blah. The French had another little debate, and obviously they think that it strengthened the case against Le Pen, so that's stabilizing the euro, but the euro still has some real serious difficulties, and it's only going to get worse here as we move forward. A lot of it's been discounted into it. I mean, we really should be in the upper 115 to 120 range, but this has been holding it back with some of the uncertainty, because an upset there could devastate the EU, literally. I mean, could end it, because you would have all sorts of fragmentation. That's not to say that the Greece thing isn't still going to blow up and have problems. Again, flight back to quality, still way over inflated, particularly when you have the jobs numbers, the potential for, and it's interesting to listen to the Fed talk about how there's full employment, but still, 90 million not participating in the labor force, which is always an interesting one. Oil, it's getting ahead of itself. There's still going to be huge supply gluts, and while the ramp up has been clear, and I think this shows the beginnings of the realization that, hey, maybe there will be more utilization if some of these areas of the economy start to improve. It's going to put pressure. The real pressure is going to be on gold to the upside. I don't think there's any question about that at this particular point. I know the Fed's talking about deflation and stuff, which is very interesting, counterintuitive talk, but they're entitled to say what they want. Oh, you know what? Let's put the fib lines back on this one. And we can take a look at it again, because it was a nice little intraday play. Let me shrink it just a little bit going back from the other day. We had the nice little rally. We ended up with a series of peaks going through intraday, and this was an interesting one because when you still have rising shakeout, even though we got into these extremes, look at it, we were well over plus 25, you knew there was going to be a retrace going into that. I typically look for the first abatement of the Azure lines in that, because when they're still rising, you're still within the mid-range of that trend move. But just after that, you end up with the decline that starts tipping down, and sure enough, made for a pretty decent retrace. But where did that retrace go? Right to its 50% level, just slightly above it, and then reset with the orange coming up underneath. Had another rally, but as soon as that rally peaked, lower shakeout, you can see it clearly, lower shakeout, matching highs with the lovely orange signal, bye-bye, and look at that decline. And then if we get rid of the fib line, you can see the follow pretty much maintained, and still is maintaining this from a short standpoint all the way through, following that long algo setup. Never got above in any way, shape, or form, and nice follow too with the short algo rising above it there. So we did have a little bit of a reset for this ABM right about here, but you can see it just maintained flat, and then once the shakeout started to lose it again, there just wasn't anything there. And now we can already see that the trend move for the upside is already waning, as well as overbought. So there's still a little bit more left in the decay. And I think it's just because you're going to force people to go back to the sidelines, because now they're talking about no healthcare possibilities till after the holiday break that they're going to do for a couple of weeks. And I mean, at most, I think all they're going to be doing is doing the Supreme Court nominee. That isn't going to be sufficient. And of course, then there's also the headwinds of political scandal with the whole leaking of information and masking. And that's going to cause some market distress because it creates some uncertainty as to where things are going to go. But a little bit of paralysis in the government is never a bad thing because it just means they're not getting in the way of government. But in this particular case, government not getting in the way of business. But in this case, with all the deregulation of, past implementation, this is actually a net positive because it's going to save significant amounts of money for a lot of these businesses, and that will translate itself, maybe not now, probably in the later part of the year, but that's what the market's pricing in anyway. So you got to be forward thinking on this stuff. It's not about now, it's about 6 months from now and how much impact that will have, let alone a year. So this is where there's a discrepancy. And I know the Fed was talking about how asset prices are inflated, but that's assuming that their inflation numbers end up being correct. And I think the market's predicting that their inflation numbers aren't accurate. And so they're pricing in some additional value to that. And that's always a tough one because I think people have always had difficulties pricing markets because they just want to look at price to earnings, and it doesn't always reflect what that happens to the value of money. And so it's something to keep in the back of your head that when everyone talks about how inflated prices are, that not necessarily because if the dollar continues to shrink through inflation, they're really not that overvalued. So that's the long and the short of it in this particular case. The short's still running. So there you have it. We'll keep it dialed in and keep putting posts on the Skype chat. As always, though, trade well.